Thank you all for your patience. My name's Trevor Watkins. I think it's quite amazing, really. 30 years of Soccerex. It's probably some of us on this panel have been involved in football 30 years or more, particularly probably actually looking Charlie and I. It's 30 years ago that I took over AFC Bournemouth, and here we are about to hopefully qualify for the Champions League. Football, when I went into it, was no way an asset class, no way an investment, but that is what we are going to be speaking about today, how times change. Thank you for the introduction to the panelists. So I think we'll just go straight into it. We're going to be talking about investment, capital, ownership. We've got four very different stakeholders here. Perhaps just over 30 seconds, gentlemen, perhaps just as well as introducing yourselves, tell us where you're coming from. What's your role in the industry? Perhaps, Carl, if we start with you at the end, and then we'll come back to Christian on the end here.
Yeah, absolutely. First of all, this as an American football player in the past, speaking on this panel today, quarterback. Speaking on this panel today is a little bit of a pinch me moment. I didn't imagine this would be the case. Today I'm with Momenta Sports. It's a subsidiary of the family office that I'm a managing partner of, and our focus is investing at the intersection of team ownership, typically in minority positions, but where we can then bring in larger amounts of capital to real estate and infrastructure development. So we very much see sports properties through the lens of a platform orientation. We're very focused in the domestic U.S., but as I'm in Berlin, Germany, where I live with my family, there's a significant focus on Europe from a future perspective, both with our firm and with me personally. So happy to be here, happy to have this discussion.
And just very quickly, in terms of sports that you have invested in and the kind of ticket size you look at?
Yeah, we're typically writing checks on the team side anywhere from 5 to 7 million euros, pounds, dollars, and then typically 15 million to 20 million in a co-GP capacity on the larger real estate development. Our largest project and most notable project right now in the U.S. is with the USL Championship Club and a women's club and a 9,000 athlete youth academy called Sporting Jacks, where we have 375 acres of land under control. We'll build a 15,000 seat stadium and then develop the 150 acres around that stadium. So that is probably the main focus for us at the moment from a portfolio company perspective, but it's an illustration of the type of deals we like to pursue.
So Ollie, a little bit like myself, a reform lawyer.
Former lawyer.
A former lawyer. Well, I mean, I still do law, but so former lawyer, why the change and what's occupying you?
Yeah, so that's right. I was a lawyer at a law firm similar to your own in London. Did a lot of transactional M&A work, both in sport and outside. And I founded Insight 11, which is a M&A advisory firm focused specifically on football. And coming at it firstly from a legal background, I think over the last 10 years, we've seen sport, and specifically football, particularly in England, have some really interesting regulatory and legal developments that play into M&A strategy and also operational strategy. So as a lawyer, I sort of saw an opportunity to come at it both from sort of an M&A advisory angle, but also bringing sort of legal regulatory expertise. And also just more broadly, I think sport and football is in Europe is still in this moment of professionalizing. You're still seeing a lot of institutional capital come into the space, and saw an opportunity essentially to help that kind of capital coming into the space and advise them on what acquisition strategies maybe offer a better sort of chance of achieving alpha than others.
Right, so one investor, one advisor. Charlie, I mean, you've been involved in numerous clubs. What role do you perform?
I haven't been around quite as long as you, Trevor. I worked out it's 20 years. As a communications advisor, my first gig in football was advising Arsenal on resisting a hostile takeover bid by its former vice chairman David Dean and a Russian gangster called Alisher Usmanov. That was in 2007, so it's a long, long time ago now.
Yeah.
Not long after that, I became a director and sort of, part of the ownership group at my home club, Oxford United, rather like your entry into football with Bournemouth. We'd fallen, in fact, unlike Bournemouth, gone all the way out of the whole league into the what was then called the Conference, now the National League. And over the following 3 or 4 years, had a lot of fun trying to work out how to run a football club, because like a lot of people coming into it, I thought, well, it can't be that difficult, right? But it turned out to be rather more complex than I originally thought. And then subsequently to that, took on an advisory role at Tottenham Hotspur on their new stadium project. After that, became part of the ownership group and was an executive at Sunderland. And then subsequent to that, led an investment group and became chief executive of Charlton Athletic, which I exited last summer. At the moment, I'm a director of 3 clubs in Belgium, Jamaica, and actually a non-league club in London.
Wharton and Hersham.
Wharton and Hersham, the mighty Swans. 4 promotions in 6 seasons. The most successful club in the country now that Wrexham have just failed.
Huge number of followers.
Well, we get 2,500 a game, which in what was then the English 7th tier shows you the depth of English football. Is quite extraordinary. And you know, if I look at my club in Belgium, which is historically a top division Belgian club, we're bringing it back up from the dead. It went bust about 10 years ago, and on a good day there we might get 3,000. And that's for a city club, and yet in England you can get that for a tier 7 non-league club.
So, I mean, it's great. So we've got investment advisor and somebody who really guides people with the money. But Christian, we've got someone who actually lives and breathes and runs a championship club. Tell us a bit more.
Yeah, that's right. I've been the CEO of QPR now for just under 2.5 years. Before that, I was more on the M&A advisory side. I was a managing partner for Europe at a business called Retexo. So it's nice. If you've put this group together, it's a really good mix of kind of.
Well, I'm here representing Champions League football, hopefully, for
yeah. So we're all aspiring to get to that. But no, it's been 2.5 years in the Championship at a moment of real change in terms of, I think it's now widely regarded as probably the 5th or 6th highest quality league in terms of you know the talent and the show, and from an economics perspective, it's a uniquely challenging division. There's no league in European football where the average wage to average revenue ratio is so poor in terms of trying to run a business that could break even. So it's definitely a unique challenge.
Well, if I just come back on that, because you've got 4 of us that basically our livelihoods revolve around sport and football in the main, because a lot of the money's there. Virtually every club in the Championship loses a shed load of money, and a friend of mine, his wife's always saying, how much do you write a cheque for each year? And yet we're talking about investment, we're talking about ownership, we're talking about waves of money coming in. What's your view of the kind of state of the nation in English football in the Championship, or just generally at the moment, Christian?
Well, I mean, you're absolutely right. So in the last 5 seasons, only 3 teams have been able to post a profit. So 5 times 24. And then only 3 times in that 5-year spell has a team in the Championship posted a profit, which is pretty mental if you have a short to medium term investment thesis that you are going to make your money back and some by buying into the division. I think it's a pretty fractious moment in the Championship presently, because you have a handful of investors who are willing to take on massive losses because either they think the prestige of eventually going to the Premier League or the potential asset appreciation for the club of going to the Premier League will allow for an exit that you know, breaks even and is a lot of fun along the way. But then increasingly you have 5 or 6 teams who structurally, whether it's because of they've had investment groups and they're sort of 3 or 4 capital calls in and they're struggling to raise to put a budget together for next season, or their ownership groups are simply fed up with the idea that it costs more every year to just stand still. You have, I think, probably a moment now in at least EFL Championship M&A where valuations are slowly coming down as some of these clubs get more and more desperate to get out. So all of this is then also underpinned by, on Friday, a vote on a change around financial regulation, which may allow clubs to spend more money and owners to lose more money. So sometimes I think we're in a bit of a dream, and not a good one.
Kyle, you're an investor. I mean, does it make any sense at all? I mean, you're looking at opportunities. So with Christian saying, well, hold on a second, all these clubs are losing money, where do you see the potential? Is there realistic growth?
Well, we're certainly not focused on the championship or the Prem at all. I looked at a deal for about 8 months last year. Team was top of the table when we started having conversations, and they did not get promoted. And for me, it was a quick snapshot of like, holy, this can go in a different direction than you're anticipating. We're very much focused on where are value add opportunities. So is there a line of sight on break even? Is there a strategy that somebody can at least articulate to me related to how they're going to get to break even in what I would call in England in particular, trending National League clubs and teams in the second division. On top of that, when you think about how do you create other revenue sources outside of the kind of typical core revenue categories, for us the infrastructure and the real estate is a big component of that. We believe that projects done the right way with the real estate being owned by or with owners having exposure to those revenues can offset over time some of the balance sheet losses that you're seeing on the team side. Now that's hard to pull off. There's a lot of human beings that have to be rowing in the same direction to make that happen, but it can be very powerful in the right scenarios. And so we think through, okay, what is the risk associated with a club? Let's stay at a lower division where the entry price is much more attainable or tolerable, and we have fiduciary responsibilities. We're not just a family office investing off this large balance sheet. We have a fund in place, and so we've made that fund a 10 to 13-year fund, right? So how do we have longer time horizons? So it's all those elements.
So as you do that, what's your exit strategy?
Yeah, it's a good question. Each deal has kind of its own strategy. Now, whoever the sponsor is that we're coming behind, obviously we need to be aligned with what their exit strategy is, but in our case, the sports property is typically the kicker or the icing on the cake. You're trying to drive value to that by building infrastructure around it.
So it's not the success on the pitch that drives you?
Obviously, that's incredibly helpful, but no. At the end of the day, it's not.
So I'm going to come back to you in a second, Ollie, but I want to go to Charlie. You've been involved in multiple clubs and very actively. How are you guiding your people with money that are saying, Charlie, we don't want to lose a shed load of money, we want to make some?
Yeah, well, it's a great question, and listening to Chris and his frustrations, because I think he and I see this part of the world in quite a similar way, I think points to a really interesting moment in time. For those here who don't know, English football has just become a regulated industry.
But not by football?
No, a regulated industry. So that's equivalent to being a utility, like the water industry, the electricity industry, the TV industry. And I actually haven't yet really met anyone in football who understands what that means. Now, I used to be a political journalist. I understand what it means. And what it means is that from now on, when a club goes bust, the regulator gets pulled into Parliament and potentially is even liable legally. Okay?
Just to help everybody in the audience, this is a regulator appointed by governments outside of football who's now taking responsibility for if you buy, you sell. If Christian wanted to be chief exec at another club, he'd have to send his CV to the independent regulator.
That is all true, and people in football understand that bit because that is a transfer of competence from the Football League and the Premier League to the regulator. They understand that bit.
But
the bit they don't understand is the sentence that says that his core responsibility, legally mandated responsibility, is to enforce sustainability on English football. So when I hear Chris relating the stories about his division's crazy ideas about their own cost regulations, they don't understand. They're gonna, whatever they vote this time, he's going to take that all away from them. They are going to be, because he himself will be the person called into Parliament when one of those clubs goes bust. So what's going to happen is, in my view, is that because he has
the regulator.
Right. Yeah, possibly. So just quickly, because this is an important thing to understand, is that we're in the middle of a negotiation, as you know, about a redistribution of TV money from the Premier League to the Football League. And it looks like it's rounding out at being about, on average, about £7 to £8 million per club extra for championship clubs who don't have parachute payments. So the dream of certain championship clubs is they get all that money, but still get to decide their own cost controls. That's not going to be the way in which it's going to go. That money is going to come with a harsh cost control. because effectively the regulator cannot afford to be pulled into Parliament to explain why he has failed in his legal mandate. So I think things are going to change, and I think that, like often happens with a changing regulatory framework, that creates an investment opportunity, because at the moment we have, as Chris rightly said, actually I think Mikhail as well, that there's funding fatigue right now, and prices are being dragged down right now, but I think in 2 years' time things are going to look different.
I think we're only concentrating at this bit on investment, so money coming to buy stocks and shares. Ollie, how are you guiding your clients?
Well, I actually just want to pick up there on the regulator point, because I actually think if you look at English football clubs, you see, and you compare that just to the normal limited company in England, and you look particularly from an insolvency context, you actually see something quite interesting in that it's relatively rare for a company to go into an administration liquidation process in England and come out of it much stronger in 18 months. Derby County were 10 days away from being liquidated a few years ago. They were on the cusp of the Premier League this season. And I think that points to something interesting if you're an investor, in that there is never really, if the price is right, a shortage of buyers lining up for these clubs. Sheffield Wednesday did not have a shortage of bidders. And I think that kind of gets to the core, that if the price and the valuation's correct, as Christian suggests, I still think there is going to be a huge amount of interest in English football clubs. I don't think the regulator is necessarily required to come in and ensure that there's always going to be this line of people coming.
But at the moment, Ollie, there's a very significant discount applied to English football clubs because of the capital calls. So effectively, if I'm advising investors, what I have to say is, okay, look, over the next 4 to 5 years, at the moment, if you were in the Championship, you should be expecting to lose £15 million a year. So bear that in mind, right? This is going to be £60 million.
But just on that as well, I think, and I agree with that, but I think you also have to look at that comparatively across Europe.
I was going to say, because this audience, we don't want to be too English-centric. What's your view across Europe?
So I think to sort of make the case for the Championship, if I'm advising someone who says, hey, I want to buy a club with the view of maybe buying them in the second division, getting them promoted, and the idea is the enterprise value's gone up because I'm going to be in the top division where broadcast right distributions are so much more valuable. I would say that buying a club in the Championship makes far more sense for 2 reasons. One, level of broadcast distribution rights in the Premier League is so much higher than anywhere else, but more crucially, it's distributed on a much more equitable basis. So if you are Sunderland, come up from the Championship, finish mid-table in the Prem, you will do much better than a team that's come up from La Liga Dos and finishes 6th, just because in the way in which the broadcast revenues are distributed. And so I think if you're making a case for the Championship, the idea is, okay, sure, if you can wear that sort of 15 million, as you mentioned, Charlie, in losses, you have a better chance of making it back than when you're comparing it against a France, a Spain, or an Italy.
Christian, agree, disagree? I mean, you've had a fairly stable group of investors at Queen's Park Rangers. The London clubs always get attention, but you kind of set your direction of travel.
I think the question is, let's say Charlie's right. I hope Charlie's right, but I think it's going to take 3 or 4 years. The question then is, are you willing to wear 15 or are you willing to wear 25? Because 25 might be the new 15 next season. And ultimately the league wasn't helped by Birmingham and Wrexham both coming from the English third tier this season and deciding to spend Premier League money as first-time Championship teams on their squads. In terms of Europe more generally, I think that the thing that we're seeing, I think there's deal fatigue from kind of majority investors in bigger blue chip football clubs. But I think probably the last 9 to 12 months from a football M&A perspective that has caught my attention is that there is much, much more demand from whether it's America or FOs in Europe to be looking at taking 10, 15, 20% stakes in some of these smaller European football teams who, maybe are not even in what we would call Europe's top 5 leagues, and maybe not even in the first divisions of some of those leagues. And the reality today, Trevor, is there are 4 or 5 leagues in European football where you can buy a club for 3 or 4 million euros. It's losing 600, 700,000 euros a year, and you can fix that pretty quickly, as long as you come in as investors knowing what you don't know, and not assuming that you can apply the stories of success that you've had in other industries that have put you in a position where you're able to buy football clubs, and then assume that you can do it A, quickly, or B, without a stable football plan. So I do think it's possible to make money in football today in Europe. I just want to slightly brighten the mood there, guys.
But I think it's fascinating what we're seeing. When I took over Bournemouth, there was nobody really interested. You go forward, like to when you got involved, you're beginning to see people, not just the local families with money, others coming in. Then you got people like Singer and Friedlander putting money against transfer receivables. I mean, Carl, from your perspective, we've talked about investment, but there's this wave of private capital that has come in where, doesn't it make it almost impossible to know who's actually financing and running clubs, given the amount of money that's out there and this cross-ownership and this, the big institutions now funding clubs?
It can be challenging. I mean, I've had a lot of multi-club pitches over the last 2.5 years, 3 years, which I'm still not completely sold on that structure, at least in the way that it's articulated to me. What I will say, to Christian's point, is, English football is extremely popular. It makes the headlines in the U.S., but there is a lot of U.S. family office capital today that has fatigue about how do we get into the big 4 leagues in the U.S. We can write a $50 million check, get 1%, have 0 rights, barely get tickets to the games, or we can start looking east, find these sports properties that we can think outside of just the balance sheet of the club, truly platform oriented, and our capital can go to work in a much more meaningful way. And when I'm at a family office conference, there's a handful of people that are interested in those big leagues in the U.S. The rest are asking me questions based on my proximity and geographic location, like, hey, can you give me more perspective of how we can get into sport broadly in Europe? Inherently, football is kind of that anchor piece, but there's a lot of conversations today that I'm in where there's somebody that is going into a market, they want to acquire the football club, but they want to use that as a foundation for more, meaning multiple sports under that umbrella, sharing services, sharing venues. And so I think it's going to continue to evolve and be very different than what it looks like today in just a few years.
And we're beginning to see that. Steve Lansdowne, Bristol City, multi-sports, one location. But from your perspective, you saying you went USL. To help the audience, what would it cost you if you wanted to go into MLS, roughly, at the moment?
Today, in a control position, anywhere between 600 million to $1 billion.
And so, Charlie, Ollie, if you were buying a championship club, not Queen's Park Rangers, but if you were buying a championship club in England, ballpark figures?
Well, actually, we were having this discussion just before coming in. There's a massive disparity. And sometimes I can't, even as an industry person, I can't even make head and tail. Sometimes, we were discussing one club just before coming in that was on, pretty much only a couple of points outside the playoffs to get to the Premier League and probably has the highest attendances in that division, that's currently on the market at about 45 to 50. And then you look at, people taking minority positions in Swansea City, a smaller club which is doing less well in a less good geographical location, taking minority positions at 120. So I'm at championship level at the moment, I'm really struggling to work out how different things are priced. And you can probably tell me more afterwards about how you would look at it, because it seems to have slightly detached itself from the old classic revenue multiple line. And it's becoming more bound up in whether there's a story about the whole thing. So if I was to say to somebody, well, why Swansea City at 120? Oh, well, didn't you know about Snoop Dogg? Right. So okay, so this is the Snoop premium.
Snoop premium. But it's true. I mean, we're buying a club for a client at the moment, and the existing owner puts in X million a year, and it's like, well, we'll pay you this because otherwise you're going to have to pay. You have to write that check tomorrow.
Yeah, exactly. You say to him, if you're still in charge, why are you quibbling over 5 million? If you're still in charge 1 year from now, then you've just taken your valuation down by 15 million. So
Ollie,
also just to add to that, beyond the valuation, I think it's quite interesting if you look at the structures. that have started to come in. I think if you compare it to 5-10 years ago, the number
in terms of ownership structures,
the sort of LP fund-like kind of structure that sits above clubs. So if you look at like an Ipswich, a Leeds when they were there, Swansea, I think that kind of goes to Christian's point that he was making earlier, that we've seen almost this fragmentation of ownership where people are kind of willing to come in at smaller stakes, but they're sort of backing away from...
That can make it quite difficult as an executive. I don't know how Chris finds it because you've got a smaller number of investors, but that can make it quite challenging when it comes to capital calls. It can be quite hard to predict who's going to follow their money and who isn't.
And I think that, we were talking about situations at other clubs, and that has been a problem when a group comes in and then they change their minds about what they want to prioritise, which then leads to fragmentation. But if we take that, Chris, all of us on this panel see investors, approaches, funders, not just the Macquaries who want to finance on a transfer or a stadium. You've got very complicated structures coming in, as Ollie mentioned. Is football, even with an independent regulator, up to being able to govern and understand what's going on in this complex world of finance and ownership?
Well, I mean, you have a totally different culture of governance in European football than you do in some of the kind of blue chip US sports, which is a lot of these governing bodies that are tasked with governing our leagues and our game are either aggressively sort of underfunded or understaffed, or sadly, more commonly, really poorly run and therefore massively misallocate the capital that they do have into the important bits. I think the reality, though, is that this is the biggest sport in the world today. There is absolutely nothing compelling out there that tells me that this will not be the biggest sport in the world in 50 years' time. And therefore, like as much as we have seen in the history of sport in the last 150 years, lags around professionalization and reasons why that hasn't happened, the reality is one of the most iconic countries in the history of this game, in England, now has a government regulator. We're going to be in a situation where we will see, and it may take 10, 20, 30 years, but we will see, in my view, major European leagues regulate themselves, and we will get closer to a more US-based model of commercial revenue being more impactful on the balance sheet of football clubs. Because a majority of investors, I think, just won't put up with it going forward for it not to be the case. And then, the other reality is, for me, very, very clearly, where we are going technologically as a society, as a world, means that really the only thing that we can be sure about that is going to be important going forward is entertainment. It's making humans feel things that are human. And sport is going to be at the absolute heart of that. So long term, we will get there.
And I think it's interesting you say that, because I went to a dinner with sort of 20 private equity groups who were talking about where they were going to put their money. And a number of them said, we are not in sport. We are in AI, but every time we go into AI, we're flipping a coin. We don't know which tech is going to work. We want to be in sport. So Carl, from your perspective, as an investor where we started the conversation, are we simply like trading cards now? Have clubs just become assets that get traded? There's none of the history, none of the culture, none of the loyalty to fans?
I hope not. I mean, that trend exists. I believe in the beauty of the game, whatever sport it is. And so I inherently see the world through that lens. I mean, sport is just such a human-centric deal that there's more than just returns here. You have a chance to lift up communities, other human beings. I think that you're going to see a lot of trades continuing to take place over time, and maybe increasing. For us as a family office, when we sat I was basically asked to go look at the global market 4 years ago and determine if we should participate in what then was being discussed as an asset class. Today, sports for sure is an asset class. And it was, how do we think about the trend that's happening in defense? Do we want to put capital in defense? Do we want to put capital to AI and make those bets? And then how can we hedge against technology? And where does AI enhance our investment rather than retract from it? And we believe that sports is an incredible ecosystem to do that because of IRL. In real life, to what Christian says, humans are going to want to continue to connect in person, have human experiences that the world is going to augment in many other ways in our lives in the future.
So, Ollie, I was going to ask you a question that just focus in on that. The Athletic recently ran a piece on Chelsea and said, you know, if everything stood still, the investors who've gone into Chelsea would need to sell the club for 5.1 billion simply to break even. Is this all going to come crashing down? Or is it really going to carry on just accelerating?
So I don't think it's going to come crashing down. And the reason why I don't think it's going to come crashing down is I think ultimately sport in many ways epitomizes the beauty of a free market. They're not going to sell it at 5.1 billion. But if they want to sell it, they'll sell it to someone who prices it at the appropriate valuation. And so I think, to my earlier point of, it's very rare that you see clubs go all the way to the wall and go bust. Obviously, there's examples like Bury, but I think I come back to that because that...
Restructured, Bury's come back.
Exactly. And I come back to that because I sort of hang my hat on that as this isn't going to come crashing down because, to Christian's point, these are cultural institutions that have a huge amount of historic, tangible value that people are always going to want to be interested in.
Yeah, it's because the reason for business failure in sport, we're talking about football clubs mostly here, is not, like, the reason for most business failure is a revenue problem. The reason for football club failure is a cost problem. So, in other words, there's always going to be somebody at the tail end who's willing to pick up the revenue, because the revenue, the fan base, going to your point, Trevor, earlier on, the fan base is still there. So you've still got an underlying business case there, because you still have the people who want to pay to come and watch football. It's just that the cost base needs restructuring.
But you've got protests at Liverpool, for example, over season ticket prices. You've got
childish.
You've got Bury's example of how a community rescued its club. You can even look back to Bournemouth. I mean, I didn't have any money, and you know, we had a town that got off its backside, and we saved our club. But has football lost its soul, Charlie? With all the talk of investment, all the money coming in?
I don't see, honestly, football being very different from 25 years ago when I was a kid. It's different in lots of ways, different technologically. You can see it on lots of different TV stations, which when we were younger you couldn't. Obviously, Trevor, it was one match a week on ITV in our country and very similar in other countries. But actually, at the core of it, like, you refer to the Liverpool fan protest over being asked for an inflationary ticket price rise. I mean, they genuinely do not understand what inflation is. This is the problem, right? They actually think that that is a ticket price rise when it's not. It's just keeping ticket prices exactly the same. And that reminds me very much of various protests that I was on when I was a young guy as a football fan, right? So the ever sort of the naivety of football fans about business to do with football is the same. The type of owner is different. As you say, instead of it being the local business person, it's now probably somebody who comes from a very different background. But is that sucking the soul out of it, really?
I mean, you know, you look at my stadium, which we happen to actually have built, where I pay £1,200 a year for my season ticket in the middle. But we all got an email, 600 people this year, saying, if you want to sit where you're sitting next year, it's going to be 5 times as much. Otherwise, you can move to the corner because we need to make more money. We can turn it.
It's going to be 6,000.
Yeah.
Wow, that is quite a jump.
That's
not an inflationary rise.
That's hospitality.
Yeah.
But, I mean, it's all these dynamics within sport. I mean, Christian, you spoke earlier about, is it going to be 15? Is it going to be 25 million? It seems to me that nothing much has changed in 30 years. Do we need something to control the lunatics from running the asylum, or is football just going to be free reign? Where do we end up with all of this? As a well-run London club.
We're trying. I think it's a really difficult dilemma, isn't it? Because on the one hand, sometimes you want to save investors from themselves. But on the other hand, they've been so successful to accumulate the wealth, to be able to take on an asset that isn't likely, 90% of them are not going to make money on the football clubs that they buy in European and world football based on the last 10 years. And then so to a degree, they've got to be able to feel engaged with the strategy and feel like they have a real chance of winning. I don't think I think very few people are in football with zero desire to win. There may be other factors, like Carl said, that outweigh that, but everybody wants to win. So, look, I think what we will see in the next 5 to 10 years is that there will be there will be further crises ahead. The extent to which those crises are crises, or whether they're just magnified by the world of social media algorithms and the intensely sort of weird way that we're all connected, I don't know. I think probably the great thing about sport and football in general is a reflection on the wider society and where we are and how we're doing. But ultimately, I think I'm glad at the very least that we will begin to be able to try to piece an answer together of the question you just asked by seeing how this regulator in the UK does.
So,
because, sorry, very, very last thing is because we don't have any, at the moment it's difficult to answer that question because we don't have great regulation in football at the moment. Could this be good regulation? Could it put clubs in line? Could they be more sustainable? We're going to find out. And
we may well see a very tough decision when a club goes out of business. But gentlemen, we're flashing red, so we're going to be kicked off, I'm sure, in a second. But before we are, 10, 15 seconds, the future investment in sport, your views.
I'm very, very bullish outside of the UK, in Germany, Switzerland, Poland. I think some incredible things are going to happen in Germany over the next coming months. So I'm very bullish there. And then I think team owners really need to think about the commercialization of the social channels that they currently have. A lot of the revenue is front of jersey, social, and monetizing that the right way instead of making it a cost center is something that anybody leading an organization today should be focused on. It's very, very low-hanging fruit, and there's now technology that allows you to monetize it.
Great. Ollie.
I'll keep it simple. If I was buying a football club today with my own money, I would buy one in Japan or Norway.
Fantastic. So that's 5 countries covered. Charlie?
I think actually, having been investing in running clubs outside of England for a little bit now, the future is England, because the way in which the modern media economy goes, it drives towards always there being one central core league which everyone's interested in, and that is the Premier League. It's the equivalent to the NFL, and everybody else is going to be searching around for scraps in what's going to become a very challenging TV rights environment in the next 20 years. Those TV rights packages in Serie A and La Liga and Ligue 1's already gone, Germany, are all going to be going downwards.
Christian?
Very difficult to follow that. If you're interested, speak to these guys. And if you want to know what it's like to be in English football, come and find me. But fundamentally, like I said, this will be the biggest sport in the world in 50 years' time. So what are you waiting for?
And I would echo that. I'd say, we just closed our financial year. It's the busiest year ever. Saudi, America, the countries you've mentioned. What a terrific panel. What terrific insights. Everybody will be around for the next few hours, so do come and say hi to the guys. But for now, big round of applause. Thank you, everybody.
Thank you.